At the time of this recording, Adobe stock is down more than 12% after reporting a disappointing Q2 outlook and investor concerns that it is falling behind some rivals and losing its AI advantage. Quoting CNBC, the sell-off came despite better than expected results, which included adjusted earnings of $5.08 per share and $5.71 billion in revenue. But worries have mounted in recent months that the company is falling behind some competitors and losing its advantage in generative AI. The company's annualized recurring revenue from AI contributed $125 million during the period, and Adobe expects that to double by the end of the fiscal year. Bernstein's Mark Moerdler, who recommends buying on the stock, wrote in a report that to believe that Adobe is an AI winner and that AI is not replacing existing revenue streams, investors need to be able to observe longer-term trends. Keith Weiss, an analyst at Morgan Stanley, wrote that new disclosure of Gen AI contribution is a step in the right direction, but that investors need to see a clearer roadmap at the company's investor meeting at its annual conference next week. Morgan Stanley has the equivalent of a buy rating on the stock, end quote. And quoting Reuters, analysts and investors are watching for when Adobe will be able to ramp the monetization of its generative AI products as it invests heavily in distinguishing itself from rivals by infusing sharper AI editing tools into its vast portfolio. I think guidance is rough, and I think people are questioning, is the AI monetization quick enough, said Parker Snook, senior research analyst at M Science. In an attempt to break ahead of an increasingly competitive market, Adobe has been aggressively integrating AI into its software to boost the appeal of products such as Photoshop, which is used by professionals across a variety of industries. Annual recurring revenue for Adobe's AI and add-on offerings was $125 million at the end of the quarter. Adobe expects to double this ARR figure in the next 3 quarters as it exits fiscal 2025, its CFO Dan Durn told Reuters in an interview, end quote.